So in today's video, I want to help explain the change to the world order and why money will never be the same again. But first, I want to thank billionaire investor Ray Dalio for his incredible video on YouTube, which has over 6 million views. It is probably the single most important video on economics that you will ever watch, and I want to thank my friend Graham Stephan for introducing me to it. In that video, Ray Dalio talks about the most important lesson that he's ever learned in his lifetime of investing, which is this change to the world order, which is something that has never happened in his entire lifetime, but something that in the last 500 years has happened at least 3 times before to the Dutch, the British, and the US empires, and that it's going to happen again, but in our lifetimes. Now, you might have seen that video, you might have missed it, so in my video, I want to help summarize exactly what was in it, but I also want to talk about something he didn't mention, which is the role of crypto. How Bitcoin and Ethereum are going to play a very important role in this transition of money. Part of this video is sponsored by Masterworks, but more about them later. I'm excited. Let's get right into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the new changes. But first, let's talk about what the current world order is, because all it is a system of rules with how we talk to each other, underpinned by one simple thing: money. Money is power, and the United States right now is at the top of this world order. And it started in 1944 with something called the Bretton Woods Agreement, which placed the US dollar as the apex currency, the world reserve currency. And all that means is that it is a money that is generally accepted all around the world. And a change would mean that it would be no longer the United States dollar, which sounds like a crazy conspiracy theory, but it's actually not. In fact, our own chairman of the Federal Reserve, our own Papa Powell, has said so himself. There could be more than one world reserve currency, which signals that a change is gonna happen soon. Ray Dalio calls this the big cycle, which is broken up into 3 simple steps that keep repeating themselves over and over again throughout history. And here's exactly what they are. The 3 simple steps are the rise, the top, and the decline. This happens over a period of roughly 250 years. And the first step is the rise, which is where a group of people come into power, they consolidate the power, and they unite the country under a single cause to become economically productive. This can be measured by things like their education, which leads them to create better technology, which makes them more competitive, which makes them become a global trade power, increasing their GDP and economic output. And because they need to protect themselves from other competitors, they make a strong military, which makes them a global power. This gives them financial stability, which eventually leads to the creation of a world reserve currency. And this leads them to the second step, the top. The top is a very interesting place for a country because what makes a country strong and successful is eventually what leads to its downfall. This is because when you're at the top, you have to spend more money than you end up making to stay at the top. And we could see this with wages, for example. We have to pay people here in the US a really high wage to incentivize them to work. Otherwise, they become lazy and they stop working. But this makes us less competitive because all around the world, if people are paid with our world reserve currency, those people and their labor could be had for a lot less. And this makes their products a lot cheaper and more competitive. Now, because you're a world reserve currency, this leads to more confidence, and confidence leads to excess borrowing. Excess borrowing leads to inflated asset prices, which eventually leads to a bubble. Now, this bubble exposes the wealth gap between the richest and the poorest, where one half wants to protect the wealth and the other half wants to redistribute it. Now, this is what leads to the bubble to pop. And when the bubble pops, this is what leads to the printing of money. And when you print money, you weaken the currency, and this is what leads to the downfall of a country. And while all of this is happening, the competition is only getting stronger. And that's when the world order changes. Now, this has happened many times throughout history before in almost exactly the same way. Now, the United States in this timeline is in the scariest and most interesting part of it, which is the decline. So recently, investors have been faced with a dilemma because inflation is at its 40-year record high, the Fed has started to increase rates, and top firms have started to predict that stock market returns will be under 5% until 2035. So as a way of dealing with this, I've been investing into alternative assets over the years, and they've been doing pretty well for me. And it seems like people are catching up because just recently, JP Morgan declared that alternative assets are no longer optional. In light of this new normal, new platforms have been created to give people access to these new asset classes. And one that I really like is called Masterworks. Masterworks.io has solidified itself as the platform for investing in contemporary art. They let you access their exclusive investments from names like Monet, Banksy, and other iconic artists for just a fraction of what billionaires pay to purchase. Roughly 2/3 of billionaire collectors allocate 10 to 30% of their entire portfolio to art. That's because contemporary art has outpaced the S&P 500 total return by 164% from 1995 to 2021. It's a natural hedge against inflation and a great way to diversify. Now, since 2020, Masterworks has sold 3 of their paintings, with each returning over 30% net internal rate of return for their investors, and their new offerings sell out in hours. 30% is just wild, so if you want to get in early, go to masterworks.io, create an account, check out what they have, and start investing in their offerings. Using my link down below, you can skip the waitlist. Thank you, Masterworks, for sponsoring this part of the video. Now let's get back to it. Of the roughly 750 currencies that have existed since the 1700s, less than 20% still exist to this day. Now, for the Dutch, their world reserve currency status ended sometime in 1784 after they lost the Anglo-Dutch War. And when they couldn't pay for their debt anymore, it created a run on the banks and money printer go and the world order was changed. For the British pound, they financed so much of their debt because of the global conflicts and World War II that they couldn't pay for their debt. And once again, money printer go and the world order was rearranged. The last phase of the cycle, the decline, usually happens when a country breaks the link between its currency and the commodity that's backing it. Because when that happens, the ticking time clock starts. The reason they break that link is because it's a lot easier to finance growth through excessive spending and excessive borrowing. If your country has problems, just print more money. But with hard money that was backed by gold, you couldn't do that. Well, technically we did, and that's why we got off the gold standard, because we couldn't avoid that sweet, delicious, free printed money. But that's why in situations like this, assets act like a sponge that suck up all of this excessive money. That's why one of the core principles in Ray Dalio's video is when governments print money, to invest your money in commodities and assets and investments like stocks and real estate, because they've always gone up in value. This has been true after the 2008 financial crisis. This was true after the 2020 pandemic. It has been true many times in the past, and it will continue to be true many times in the future. That was the summary of Ray Dalio's video. But here's where things get a little more interesting. More important is crypto, specifically Bitcoin's role in this entire story. And this is gonna blow your mind. First, I wanna give credit to Anthony Pompliano for making a video about ZOLTAN POSZAR. With a name like that, it reminds me of these things when I was a kid.
Come and let Zoltar tell you more.
Remember those? That's not at all what the guy does. He doesn't predict fortunes, but his resume is insane. Check this out. He served at the Federal Reserve Bank in New York. He was appointed as the lead senior advisor for the US Department of Treasury, and he was put in charge of market intelligence for securitized credit markets, and he was the point man for market developments for senior Federal Reserve, Department of Treasury, and White House officials. I understood like 1% of that when I read it, but all I know is that this is the guy that the smartest top finance guys go to ask for advice on the markets. And just recently, he published a paper called Bretton Woods 3.0. Now this gets insanely complicated, so I will try my best to break down exactly what he's trying to warn us about. He opens the paper by saying we're gonna have a commodity crisis. Now remember, commodities are things like precious metals, gold, oil, gas, beef, things like that. He says the sanctions we placed on Russia are going to throw the financial markets out of whack, increase inflation in the West, which will lead to increase in interest rates, which could cause us to go into a recession, which would mean a weaker dollar and a stronger Chinese currency. And here's how he says this will happen. Russia is extremely rich in commodities. Russia's also made a lot of money trading with other countries. This is called a FX reserve, or a foreign exchange reserve. Think of this as like a wallet that every country has that has a bunch of foreign currency inside of it from all the business they've done. Now, Russia's foreign exchange wallet was recently frozen, meaning that Russia can't really use that money anymore, which will lead to the instability of the markets. Here's a perfect example. Right now, non-Russian commodities are going up in value. Russian ones are going down in value because nobody wants to touch them. This creates extremely dangerous market conditions. Here's an example. Imagine you have Robinhood, right? And there's one stock in there, Coca-Cola, whatever it is. It doesn't matter what it's worth, but this one stock is within fractions of a penny the same price on Robinhood as it is anywhere else you try to buy it. This means the stock market is stable. Now let's imagine someone comes along and is like, ew, Coca-Cola stock from Russia. I don't want to touch that thing. I'll give it to you for $3.50. This creates more of a difference between the bid and ask spread. This creates instability in the markets because no one can decide what the stock is truly worth. Look at it from the lens and the perspective of the 2008 subprime mortgage crisis, when people were packaging worthless, toxic CDOs and then selling them off to poor pension funds. In this case, it's the Russian commodities that are the equivalent of these toxic CDOs that nobody wants to touch. The problem, though, is that you can't just cut off circulation in one part of your body and say, I don't need this arm, and expect there to be no consequences to the rest of your body because everything is interconnected. This is especially dangerous in margin trading. This is where people borrow money and trade stocks, commodities, foreign exchange markets, and this leveraged money is extremely sensitive to volatile markets, which means if you invest that money into commodities, this can create a margin call because it dips the price below a certain threshold and it causes a huge wave of sell-offs, which drops the price and guess what? Creates another wave of sell-offs and margin calls. This is extremely dangerous. And this isn't just true for the commodity markets. This can happen in foreign exchange or money markets too. Now, usually when something like this happens, the answer's pretty easy. We have what's called a backstop, which is where our central bank can just come in, print some money, buy up whatever needs to be bought, stabilize the market, and close that gap. But we can't do that this time because it's the Western banks that are doing the sanctioning, which means it doesn't make sense for them to come along and help rescue Russian commodities. That's why all of us around the world are paying higher commodity prices. Gas prices are going up, and it's just the beginning. Other commodities will soon follow. When this happens and you get an increase to inflation, we have to increase rates. When you increase interest rates, you increase the odds of a recession. And guess who this benefits? This is like the last perfect missing puzzle piece to Ray Dalio's world order theory. China, our competitor. Imagine if they start money printer go brrr and buying up all the Russian commodities that nobody else wants to touch. That would help stabilize the markets. It would help all of us. But it would also give birth to a new world reserve currency and a change to the world order. But either way, the author says that if Bitcoin is still around at that point, it would be a huge benefit for it because right now the world is watching in real time as the Russian wallet gets frozen and becomes worthless. And if you're the leader of your country, you might think twice about keeping your money in a money that can be frozen just like that. And that's the evolution from the Bretton Woods 1.0, which is money backed by gold, to a Bretton Woods 2.0 money, which is a money backed by nothing and the Federal Reserve or the central bank, and the Bretton Woods 3.0 money, which he calls outside money, which is money once again backed by a commodity, gold, or maybe even Bitcoin. And that makes sense to me. So here's how I'm preparing. No matter what happens, it is impossible to predict exactly when this major change will happen. So I try not to stress about it day to day. And instead, here's what I do. I invest my money in high quality NFTs. I'm just kidding. Please don't do that ever. Instead, I just invest because I believe that money will work harder than I ever will. It's never gonna call in sick. It's never gonna ask for vacations. It's always going to constantly recruit other little dollars just like it. That's why I believe in Ray Dalio's core principle of when the government prints money, buy commodities, buy real estate, buy stocks. But I also think that is a linear solution to a very complex problem, which is why I also invest into Bitcoin and Ethereum. Personally, I have no idea if there's gonna be a commodity crisis in the future, but at the very least, I do believe some countries may wanna store their wealth not in dollars, but in something else as they realize that the dollar could sometimes be a liability, especially when you realize that owning real estate or even businesses overseas does not guarantee that that property belongs to you, when we're seeing powerful corporations like McDonald's have their property stolen by another country. Maybe some of them will reconsider and keep their wealth stored in a technology that's based on the law of mathematics, whose supply we can track down to every single Satoshi, and whose supply we don't have to rely on not being debased or devalued by another world power. That, I think, is only gonna become more valuable over time, especially if only 1% of the world's wealth, roughly $400 trillion, flowed into Bitcoin. It would be game over, especially if you owned at least one, if you dollar cost average into it. As always, have a wonderful rest of your day. I'd love to hear your thoughts, but smash the like button, subscribe if you haven't already. Go grab up to $250 worth of free Bitcoin with this link right here. Go get your free stocks, links down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I will see you back here on Monday and Friday, sometimes a Wednesday. Bye-bye.